My dear friends, I welcome you all to the channel that is Hospitality Education PPT. And as you all know that we are continuing with a series on hotel revenue management and yield management. And today is our sixth part of it, where we are going to discuss more in details about the example of the Hubbart formula. And name of the topic we are going to discuss today is the Hubbart formula, the strategic hotel rate setting. This session is not very long session. Only you are going to concentrate on how the calculation is done. So you need to focus on that for a short span of time. You all know that it will help us to discover how the Harvard formula offers a bottom-up approach to strategic hotel rate setting, ensuring financial viability and optimal return on investment. So we'll take all these points into our consideration and we'll work on a particular scenario from the hotel's point of view, how that our formula is applicable. Okay, so without wasting further time, let us proceed for the session today. Well, we are on a platform of learning, and first we'll take the hotel scenario summary on your screen now. This is a total scenario of the hotel. We are taking one tentative hotel scenario. The hotel which we are talking about, it has got 150 rooms, total room 150. Occupancy desired throughout the year is 75%. Operating days 365, that means it is running for all the years. There is no gap in between, 365 days. Now let us see some investment part of it. The capital investment, which includes building, land, equipment, and furniture, all these together is around 80 crores. That you can see. This is the figure out here. Then working capital, according to this scenario, is 20 crores. Okay? And then total investment, if you add on these two figures, we'll get the total investment that is 100 crores. Fine. Out of these 100 crores, bank is financing 85 crores and they will charge 12% interest for that, annual interest for that. Okay. Owner, the owner of the hotel, he is investing 15 crores separately to match the total fund requirement, because our requirement is 100 crores. Out of that, bank is financing 85 crores. Rest, the 15 crores is paid by as equity, the owner is paying. And against that, the desired ROI, that means the return on investment against that 15 crores, that is 15%. That means the owner will get 15% on 15 crores at the end of the business. Okay, fine. And we are having some other parameters out here. One is the operating expenses. That means once the hotel is running, you need operating fund for that, and we require 25 crores for that. Operating expenses is 25 crores. Other income, we are talking about hotel room revenue management. So other income should be excluded out of this. Other income from F&B, we are earning 5 crores, and on rental, that is ancillary income, 1 crore. Okay, altogether 6 crores. Telecom loss, guests will utilize the telephone and usage will be there, and it has been considered that 5 lakhs will be the telephone loss almost. Income tax rate, whatever you will be earning, that means especially on these, the owner is investing 15 crores, his income should be 15% on that. So that will be your net income actually. So that income, if you earn that, then you have to pay 40% tax on that. So you have to ensure that you are getting 15% after the tax is paid. Because the owner wants 15% return on investment. That means I have paid 15 crores to you for the business and I want 15% on that. I'm not considering the tax at this in this 15%. Tax will be paid and then the return will be 15% on the base on reference to 15 crores. Try to clear this. And then incremental cost per occupied room is 500 rupees. If you remember that we had discussed about two costs, one is the incremental cost, other one is the burden cost. Incremental cost is the moment guest will take one room, the incremental cost will start activating. Burden cost is that whether the guest is staying in the room or not, it is some cost already involved, and along with that the incremental cost, all these two things together will be getting the burden cost. So here we will be getting 500 rupees, that means the incremental cost per occupied room. Okay, this is the scenario given, and what is to be done, we have to calculate the ADR of this hotel by using Hubbart formula. So once again I will tell you that hotel is having 150 rooms, occupancy is 75%, operating days is 365, it is operating throughout the year. Capital investment on building, land, equipment and furniture is 80 crores rupees. Working capital is your 20 crores rupees and total investment is then 100 crores. Bank financing is 85 crores and against that you have to give 12% interest to bank. Owner's equity is 15 crores. Against that, the return of investment will be 15% on that. It will be given to 15% on 15 crores will be given to owners. Operating expenses, while operating the hotel, the expenses will be there, that is 25 crores. Other income, because we are having different areas of the hotel, out of that one area is F&B, food and beverage department. We are earning 5 crores out of that, and the rental, that is 1 crores. Altogether 6 crores we are earning from it. Telecom loss, we are suffering a loss in that area, 5 lakhs. Income tax to be paid with a tax rate of 40%, and incremental cost per occupied room is 500 rupees. Against this scenario, we have to calculate the ADR of that hotel by using what? Hubbart formula. What is the Hubbart formula? Bottom up approach. Okay, fine. Why bottom up? You will understand again out here. First thing is that step 1, we are going to calculate the owner's return on investment and pre-tax profit. What is that? Owner's return desired is that owner has given 15 crores and he wants 15% return on investment on that, and that is, if you calculate, it is 2.25 crores. But if you want to pay these 2.25 crores to the owner, owner has to pay the income tax. So that means we have to calculate, including tax, how much to be earned, so that out of that, after paying tax, we can pay 2.25 crore to the owner. You got my point? So we have to calculate the pre-tax amount. What is that pre-tax profit required? The formula is 2.25 crore divided by 1 minus 40%. That was your tax. And if you calculate this, it is 3.75 crores you have to earn that to pay. Out of that, after paying tax, 2.25 crore to the owner as return on investment. So you have to earn finally 3.75 crores, out of which after paying tax, owner will get 2.25 crores. right? This is the first part of it, and we have to ensure that this is the profit the rooms department must support before the tax. That means we have to earn this profit by selling the rooms 3.75 crores, so that from there the tax will be paid 40%, and then the owner will get the return of investment as he desired, that is 2.25 crores. So first part is done, we are through. Now the second part of it. Step 2. Here we have to add the other financial load we are having. What are those? If you remember that bank interest, we are getting 85 crores from bank with 12% interest per annum, and calculate if you, then you'll get 10.2 crores to be given to bank every year. Okay, that is a calculation, mathematics, simple. Operating expenses, if you remember the scenario, it is fixed value given 25 crores, and we had a loss on telecom. Telecom loss also considered fixed value 5 lakhs of rupees. So if you see that you have to earn this, you have to earn this, you have to earn this, is your basically cost. So total cost, then direct cost, if you say subtotal of the direct cost, what are the things to be included out here? This is a pre-tax profit that is to be earned, plus this, and plus this. That means 3.75 crore plus your bank interest 10.2 crores, operating expenses already given 25 crores, and your loss on telecom 5 lakhs. If you consider these all direct costs, it comes to 39 crores. Fine. Any question till now? If not, let's proceed. If you have a question, you put me in the comment box so that I can clarify it further. Okay? Fair enough. Step 3. Deduct the other income. If you remember, if you go back to the scenario, you'll see that other income from F&B and rental, it is 5 crores and 1 crore. Okay? So let us go back there and calculate. Deduct other income. Income source, food and beverage department, we are earning 5 crore. Rental income, we are earning 1 crore. So obviously our cost, total deductible income is 6 crore, because 6 crore already we are earning from other sources, F&B and rental, that should not be part of the room sale. Fine. So net room revenue needed. Total revenue was 39 crores minus 6 crores, because we are earning it from the different resources. So this is the, from the room revenue we need to earn 33 crores. 39 crores are total direct cost minus our income 6 crores. This is the total 33 crores we have to earn through room revenue model. Okay, fine. Step 4, occupancy calculation. You see the metric and value. Let us go back to the scenario once again. Occupancy, it was mentioned that total rooms the hotel is having 150. Occupancy is 75%, and operating days is 365. Find these three figures we require to calculate. What is to be done? Total room nights we have to calculate. 150 rooms, it is operating for 365 days. So total room nights available is 54,750. If you simply multiply, you'll get that room nights. Occupancy is 75%. What is that? So total room nights multiplied by 75%, and this figure is 41,063. That is the room nights occupied through occupancy throughout the year. Now we'll calculate the step 5. It is our last step for calculating the area through Hubbart formula. What is that? Area is total room revenue. That means already I have calculated this. We require 33 crore from the room revenue divided by total room nights. That is, here the room night is 41,000. That is based on occupancy. What is the formula of ADR? Total number of total amount of revenue divided by number of rooms sold. And this is number of room nights. We are going to calculate it per day basis. So this is the room nights occupied, and if you divide that, you'll get this figure, rupees 8,036.43. As this 43 is below 50.50, so naturally we will consider only 8036. So this is what our ADR is. You got my point? Fine. Now let us check Hubbart formula stage wise what is to be done. That is, during your final exam, sometimes the question comes and you have to act according. First, start with net profit goal. That means owner's return of investment. That's what we did in our first step. Add income tax load. Convert that net profit to pre-tax profit. That means to pay the return of investment to the owner, we have to earn more, because you have to consider the tax also. So if we, before paying tax, how much we are going to earn, so that after paying tax on the basis of 40%, whatever is mentioned in the scenario, the owner will get back 15%, if you remember the scenario over there. Okay, so then you have to calculate the pre-tax profit. Then the bank interest, because it is a deductible expense, you have to pay it to bank. This is your expense. Add operating expense. For operating the hotel, you are having incurring some expenses. That expense is also there. You have to consider the total cost. Add departmental losses like the telecom loss we have considered there. Subtract other income. You have to minus the other income, because here only we are focusing on the room revenue management, not the income from the other areas, not the revenue from the other areas. So subtract that income. Divide the room nights sold, get your ADR. Okay, so this is the step. If you follow, remember these and practice this sum again and again, try to remember that. It will be the child job to solve it in a short span of time to calculate the ADR. Okay, so thank you very much for attending this short session to understand the application of Hubbart formula for our strategic ADR calculation. And you know your host. I am your host, Bonukul Banerjee. My contact details is given out here, displayed out here. If you want to contact me, you can mail me out. Any doubt, any questions, you can put me in this YouTube channel, so that I'll be able to give you the proper clarification for that. If you have liked this session, please press the like button, subscribe it, and also press the bell button, so that you get the alarm first whenever the next video will be uploaded. Okay, so till then, take care, goodbye.